This research communication is not investment advice and does not constitute an offer, solicitation, or invitation to transact. Full disclosures and limitations are included in the report.
So in this explainer, we're going to be digging into an equity research report on a company called Luberef. It comes from the research house VASRO, and we're going to break down their core analysis. This is really for investors or, hey, anyone who's just curious about what makes this pretty unique industrial company tick.
Okay, let's dive right in. We're talking about Luberef. Now, what's interesting is they're the only producer in Saudi Arabia of what are called virgin base oils. And all that really means is that they're made fresh from crude oil, not from recycled stuff.
So this brings us to the big question that the VASRO report really tries to answer. When you look at Luberef, are you just looking at another oil stock that goes up and down with crude prices? Or is there something different going on here? Is it actually more of a specialized industrial company? That's the big debate we're going to unpack.
So, what's the verdict from VASRO? Well, their whole take on the company really hinges on getting you to think about it in a completely different way. And they don't mince words. The core thesis here is, look, if you just throw Luberef into the same bucket as all the other energy companies, you're kind of missing the whole story. They're making the case that this is a specialized producer and, 2026 is shaping up to be a real make-or-break year for them to prove it.
This slide really lays out that new way of thinking perfectly. On one hand, you've got the old, simple view. Oil price goes up, they sell more, stock goes up. Easy. But what VASRO is pushing for is the view on the right, that what really matters for Luberef's value isn't just the oil market. It's things they control, like how good their margins are, how reliably they can run their plants, and, critically, whether they can actually execute on their big projects. So, VASRO breaks their argument down into 5 main points. First up, the economics are all about the spread, the margin, not just how much they sell. Second, and we'll talk more about this, 2026 is the big show-me year with some very clear checkpoints. Third, let's not forget, base oils are where they really make their money. Fourth, that big Growth 2 project they have, it's not just about expansion for the sake of it, it's a strategic upgrade. And finally, the 5th pillar, the whole thing works because they generate a ton of cash, which gives credibility to their payouts.
Okay, so I mentioned that 2026 is a huge deal for them. It's this proving ground year. So let's dig into that. What exactly makes it so important? Why is everyone watching?
Well, according to the report, it's because the whole year is basically a series of publicly known major operational events. You can literally mark your calendar. You've got a 12-day inspection at their Jeddah plant in January, then a big one, a 30-day shutdown at their Yanbu facility in August, and then the grand finale. They're aiming to complete that big Growth I project sometime in the second half. It's just a year all about execution, no fluff. And to make things even clearer, management has put out some very specific numbers that everyone can track. Think of them as their key performance indicators for the year. First up is sales volume. The guidance they've given is to sell about 1.25 million metric tons of base oils.
Now this next target is pretty interesting. It's about where they sell their products. They're aiming for about 30% of their sales to be right at home, in the domestic market. And what does that matter? Well, according to the report, that's their home turf, and it's where they can get better pricing. It's a key part of their strategy.
And the last key number is the investment figure. Management's guidance is that they'll spend somewhere between 300 and 350 million riyals on that big Growth 2 project. So there you have it, sales volume, domestic mix, and CapEx. These are the 3 big numbers to watch. They're basically the scorecard for how they're doing in 2026.
Okay, so we've got the investment case. We know 2026 is the year to watch. But let's take a step back. How does this company actually make money? Let's pop the hood and look at the engine room.
At its heart, it's a conversion business. It's pretty straightforward, really. They buy the raw material, the feedstock, they run it through their refineries, and out the other end comes 2 things, the really valuable base oils, and then a bunch of other byproducts. They sell all that stuff in Saudi Arabia and around the world, and that's what brings in the cash. The key takeaway here is they're not drilling for oil. They're transforming it. It's all about capturing that margin.
And that brings us to a really important term from the report, something they say is the absolute heart of Luberef's profitability. It's called the base oil crack margin. It sounds complicated, but it's not. All it is the price they sell their oil for minus what it costs them to buy the raw material and to ship it. That gap, that spread, that's the magic number. It's what really drives the business.
And just to give you a real-world example, if you look at their audited numbers from 2025, that margin was 1,911 riyals for every single metric ton. So you can see right there in black and white, the core economics of this business at work.
But here's a fascinating detail. We've been talking about how base oils are the key driver of profit, but when you look at their total revenue for 2025, check this out. The byproducts actually make up almost half of their sales. We're talking about a total of 8.1 billion reals in revenue. So this mix between the high-profit base oils and the high-volume byproducts is a really important part of how their business works.
All right, now every investment story has two sides, right? So we have to talk about the risks. To get a balanced picture, we need to think about what could actually go wrong here.
And what the VASRO report points to is that the biggest risk isn't some huge crash in the oil market. Nope, it all comes back to that one word, execution. Think about it. If those big shutdowns in 2026 drag on longer than planned, or if they have trouble getting the plants back up and running, or that big Growth 2 project hits a snag, any of those things could really hurt their results and, just as importantly, damage their credibility with investors.
And that's why this checklist from the report is so useful. It basically gives you, the investor, the 4 key things you need to be tracking. You should be asking, 1, are the plants actually up and running? 2, is that crack margin we talked about still looking healthy? 3, what's the latest on the Growth 2 project? Is it on time and on budget? And 4, the bottom line, is all this translating into actual spendable cash to support those dividends? Keep an eye on those 4 things and you'll have a pretty good handle on how they're doing.
And that really brings us to the big takeaway here. The report's conclusion is that this isn't about Luberef needing some brilliant new strategy or a flashy new story. They already have a plan. It's public. The targets are out there for everyone to see. What they need now is proof, evidence. So the million-dollar question is, if they can just execute cleanly, hit their marks, will that be enough to get the market to finally see them not as just another oil stock, but as the specialized industrial company they want to be? That's the real test.
So, that wraps up our walkthrough of VASR's research on Luberef. Of course, for all the details, the full analysis, the valuation, and all the important disclosures and